Hi, I'm John Prudhont, and in this week's video, we will be continuing our peeling of the financial statement onion to ferret out insights that the reported numbers and financial ratios derived from those numbers can tell us about the financial health of the company being analyzed, which in this case is Home Depot, Inc. Since most, if not all of us, do not have access to the underlying sales and expenses data for a given firm and its operations, financial statements like the 10-K that was filed with the United States Securities and Exchange Commission by Home Depot, Inc. for the period ending January 29, 2023, that we will be discussing today, can be used to reduce the level of information asymmetry with the caveat that accounting practices and the moral hazard can produce unreliable results. Through the utilization of horizontal and vertical analysis, Monte Carlo simulations, and extending the analysis over a multi-year period, a trend analysis can be derived to provide an indication of not only the financial health of the company in the recent past, but potentially in the near future as well. Projections are imperfect due to confounding variables like economic shocks. Luckily, we can use techniques like Monte Carlo simulations to pro forma potential variable financial realities. Horizontal analysis of financial statements measures year-over-year changes in the reported income, expenses, and values of a company. It can give an indication of the trajectory of future metrics and company viability and value. Figure 1 illustrates the income statement for Home Depot, Inc. and reports its fiscal year-end numbers on January 31st each year for 2021, 2022, and 2023. As you can see, net sales increased by 14% from 2021 to 2022 and fell to an increase of 4% from 2022 to 2023. This increase from 2021 to 2022 may be related to increased demand during the height of the COVID-19 crisis for supplies to complete home improvement projects while quarantining and working remotely from home. A horizontal trend analysis that includes fiscal years 2020 and 2019 numbers might reveal if the 4% increase is a consistent change or if there is another reason for the significant drop. Table 2 provides a horizontal analysis of the balance sheet and reveals a year-over-year increase in total assets of 18% and total current assets of 12%, with current assets reflecting an increase in liquidity that can be used as operating capital, debt servicing, capital to pay dividends, etc. A common size analysis or vertical analysis compares income statement and balance sheet entries as percentages of total revenue, which can then be compared against the annual firm and industry reported numbers to not only gauge increases and decreases, but also to determine how a company is performing in relation to other industry players. Table 3 shows a vertical analysis of Home Depot's income statement and shows that the operating margin ratio, which is the operating income divided by net sales, increased from fiscal year 2021 from 14% to 15% in fiscal year 2022, and that Home Depot, Inc. held the line on profitability from fiscal year 2022 through 2023 at 15%. Table 4 illuminates vertical analysis of the balance sheet and disgorges the debt coverage and leverage ratios of long-term debt to total assets, which is 55%, where a below 55% ratio is preferred, and the debt ratio, which is total debt divided by total assets, reflecting 98% or an almost 1-to-1 ratio of debt to assets, and a ratio below 100% being favorable. The Monte Carlo simulation is simply a calculation of what-if situations and generally includes high, medium, and low projects based on a benchmark and a percentage increase and a percentage decrease from that number that should include the industry and economic rationale that support the projections. For the Monte Carlo simulation, we will anticipate that a COVID-like event might occur and that the estimated effect might be an increase in net earnings by a similar percentage as in fiscal year 2021 and use a 28% increase from $17,105 million in fiscal year 2023 to $21,894 million and change in 2024. If a 4% increase is reasonable based on the projected industry and economic environment, then $17,789 million and change would be the median estimate. And if the environment seems to support a potential drop in the increase in net earnings to 1%, then the projection would be $17,276 million and change, with other reasonable percentages being applied to each income and expense and asset and liability line item on the income statement and balance sheet respectively. As you can see, by utilizing horizontal and vertical analysis, combined with a Monte Carlo simulation when analyzing a company's financial statements, we can glean not only valuable insights into how the company has performed in the past, but also project future performance possibilities to help us while investing, to manage our businesses better, consult others on how their businesses are performing, and to identify areas for improvement to increase shareholder value.